So today we will be going to see that the fundamental of accounting part 2, right? So what I'm going to do is I'm going to share the presentation of yesterday's, which will continue now, right? So what we are going to see today is a continuation of yesterday's presentation. So we will have the basics now. So the basics we will understand further. We will have a little more understanding on what we explained on yesterday. So let's understand what we have discussed on yesterday, right? All right. So yesterday you have discussed the first one as a journal. Journal is primary book or original book of bookkeeping. All right. The second one is we have a ledger. Ledger is a principal book of accounting. All right. Then we have a trial balance. Fourth one we have P&L, trading and P&L, P&L, and then fifth one is the balance sheet. All right. So these are all the 5 portion of accounting which we are going to do that now, right? So let's see, let's understand one by one how we are going to look at and how we are planning to understand the further portion of fundamental of accounting, right? Let's see how we are moving into that. Let's see, go back this thing. All right. Before we move on to that, let me have some more clarity on what we are discussing this. Okay. All right. So we are good to go now, and we are good to go now. So we have 3 type of accounting. One is real account, another one is a nominal account, another one is a personal account. Real account, we have what comes in is debit, what goes out is credit. Debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all income and gains. Personal account, debit the receiver, the credit the giver. Okay, so these are all the 3 major important. Before we move on to the next page, we will also understand what are all the, the line item we are classifying as a real account. We have a land, building, then plant, machinery, and cash. Okay, so let's go back to nominal account. Okay, nominal account, we have all income and expenses like sales, purchase, discounts, interest, and other expenses. Personal account is basically we have all individual company and receivables and payables, right? So these are all the components of real, nominal, and personal. Real account, we have a land, building, plant, machinery, and cash. Nominal account, we have a sales, purchases, discount, interest, and other expenses. Personal account, we have individual companies, receivables and payables. Okay, so when we move on, we have the accounting cycle that we call it as the fourth type of account. We call it as representative personal account. That means all unpaid expenses. That means expenses incurred, but it is not paid. Prepaid expenses means the money paid in advance, like mobile bill prepaid, right? It will appear on the liabilities and asset side of the balance sheet, like outstanding salary, prepaid rent, etc. These are all called representative personal account. Representatives personal accounts. Okay. Now we have a final account, trial balance and trading and P&L and the balance sheet. These are all called final account. Final account has got trial balance where we have listed out all credit and debit balances, right, to check the arithmetical accuracy. The P&L, all nominal accounts are listed. One side we have expenses, other side we have a income. And the balance sheet we have a real account and personal account. These accounts are not closed, not balanced, and enter the balance sheet. Real account is called all the assets like plant, machinery, building, cash, stock, and all that. Personal accounts are liabilities, equity, loans, and all that. Then preparation of trading and P&L balance sheet is called final account. Final account is the last step of the accounting process. Okay, right. The big companies, the final accounts to be published at least once in a year. The public limited company has to prepare every quarter, and they have to prepare 3 copies of P&L and balance sheet. One should go to a regulator, either it may be a SEBI or RBI. One should goes to the management. One should goes to the shareholders. All these things. Okay. The accounting cycle is concerned. The first we will prepare transaction, and then it will go to a journal. Then we have a ledger. We have a trial balance. It will go to trading and P&L, and then balance sheet, and it will complete the final accounts. Right. Let me look at the scope of accounting. Accounting is classified as recording, classifying, summarizing, interpretation of financial transaction. It says recording, classifying, summarizing, interpretation of financial transaction. That is called accounting, right? So we says recording, classifying, summarizing, and interpretation of financial character and the result thereof. This has been determined by Committee of Terminology of AACPA. Okay. Let's move on. Right. The procedural aspects of accounting. We have a recording, classifying, and summarizing. This generating financial information. The uses of financial information to analyze, interpret, and communicate. So let's look at what is the objective of accounting. The first one is systematic record of transaction. The first one is systematic recording of transaction. Okay. That is called bookkeeping. Then we will have ascertainment of results, trading, P&L, and balance sheet. Then we will have ascertainment of a financial position. We call it as a balance sheet. Then we have a providing information to users. That is called financial report. And to know the financial positions or a solvency position, we call it as liquidity. Okay. So the objective of accounting is bookkeeping, right? And then we have ascertainment of results. That thing is we have ascertainment of financial position. Third one is providing information to users. The last and final is to know the solvency position. What is the function of accounting? We have a measurement, forecasting, decision making, comparison and evaluation, and control, and we have a taxation issues. Okay, by looking at, we will also have a subfields of accounting that we call it as a financial accounting, management accounting, cost accounting, and social responsibility accounting. Social responsibility accounting is nothing but a accounting which can be reported to the government, like register of companies. Then we have a human resource accounting. Who is the user of accounting information? Investors, basically those who wanted to invest in a particular company. Those who call it as investors. And the employees of the organization wants to know how this company is doing well. And lenders, bankers like you, want to know whether the company is doing well or not, whether we can invest in this company. It's called investor. The employee wanted to know whether my own organization is doing well or not, and suppliers wanted to know, can we supply goods on credit or not. Customers wanted to know whether the company financial position is good or not, and then government wanted to know how the company is safe, and then finally the public want to know. So the accounting information whatever we are preparing is a financial statement is useful for all the stakeholders, like number one, investors; number two, employees; number three, lenders; number four, suppliers; number five, customers; number six, government. Okay, so this is very important information for any organization. So the flawless accounting is very important for any organizations. Here in India, the accounting has been prepared based on the accounting standards defined by ICAI, Institute of Chartered Accountant of India. Right? Let's go back to the accounting equation. We call it as capital is equal to asset minus liability. Right? Asset is a real account, liability is a personal account. This accounting equation is also called as a balance sheet equation. Right? Please remember, accounting equation is also called as balance sheet equation. Right? Asset is equal to capital plus liability. Liability is equal to asset minus capital. Is nothing but the basic accounting equation. Capital is equal to asset minus liability is rearranged and reorganized for calculating the asset and liability. This is called balance sheet equation. This follows the dual aspects of accounting. One should remember it is a very basic in nature, but it is very important. Right. Let's go back to the relationship of accounting and bookkeeping. Every account starts with the bookkeeping. Right? Once the bookkeeping is done, then we will have accounting and we will have accountancy. To recall and remember at this stage, the accounting is nothing but recording, classifying, summarizing, and interpreting of financial transactions. One should remember whether he may be a financial guy or non-finance guy is immaterial. Any accounting has to flow on this order. Basically, accounting means recording, classifying, summarizing, and interpreting of financial transaction. Right. So before we go into the MCQ, I would like to have a brief on what we have discussed on this entire conversation. Right. So what I will do is I will just take out the new share of my whiteboard, so it will give us a fair idea what we discussed. Right. So first we will say the accounting. Then we have a ledger. We have a trial balance. We have you know balance sheet. Right, this is a flow of accounting equation. Journal is basically a primary book of accounts. Ledger, it is a principle of accounting. And basically journal you know is gives uh, the basic nature of recording. And when I say ledger, it is gives is a classification of accounts. Ledger is classification of accounts. And we have a trial balance. Trial balance gives the summary. Trial balance, trading and P&L is all recording, classification and summarizing the accounts, right? So that's what uh, your trading and P&L and balance sheet is giving it. So recording, classifying, summarizing that financial transaction, we call it as accounting, right? So before end of these sessions, so let's we see some of the MCQ so that we will have fair idea what we understood on this. Right. Which of the following is subfield of accounting? The subfield of accounting, we have a management accounting, cost accounting, financial accounting, all of the above is answers, right? The subfield of accounting, which will have management accounting, cost accounting, and financial accounting. The second question is, which of the following is the functions of accounting, except everything is the functions of accounting like decision making, measurement, and forecasting. Ledger posting is a process of accounting. So that is the reason we don't call it as the accounting. Let's see the financial statement do not consider, right? Financial statement do not consider. Here, every accounting has to follow two basic fundamental rule. One is dual aspects of accounting. That means we call it as double entry system of accounting. Every debit, there should be a credit, right? And everything should be measured in terms of monetary terms. You cannot measure in any other methodology when it comes into the accounting. I just recall and remember accounting means recording, classifying, summarizing of financial transaction. If there is no financial transaction, we cannot do accounting, right? So coming back to the answers of this question, financial statement do not consider anything which is measured in terms of non-monetary terms, right? The accounting equations is based on dual aspects of accounting. Please remember, accounting equation is defined as capital is equal to asset minus liability. Capital is also called as net worth. Capital is also called as equity in the balance sheet, right? This fifth question is more of a generic in nature. The American Institute of CPA, Chartered Public Accountant, defines the accounting, right? That committee is called Committee on Terminology. This is more of a general knowledge, right? Coming back to the sixth question, here the question talks about Vishnu after sale of goods worth of 150,000 is left with a closing stock of 8,000 INR, right? So what is this is called? Here we are just mentioning the closing stock. Here we are not talking about a transaction. So it is called as a event. Transaction means where there is a exchange of cash or exchange of money, right? So the next question is financial statement. The financial statement is nothing but your trading, P&L, and balance sheet and cash flow. All this combined, call it as financial statement, right? One should remember, if someone asks a financial statement, you should give trading and P&L. If it is a trading organization, if it is a not-for-profit organization, you should give that income and expenses statement, and then you should have a balance sheet, you should have a cash flow, and if something more is required, probably you can give ratio analysis as well as the fund flow statement, right? Right. So double entry accounting system was invented by Mr. Lucio Pesciolio, right, on 1494. It is not a new system of accounting. It was very old, right? Coming back to the question number 9, here we are talking about on December 31st, 2010, ABC Limited purchased a machine from XYZ Limited. It is a transaction which has happened. One company purchasing the machine and by paying cash. This is called as a transaction. This is not the event, right? The problem related to price rise, any price rise which has been handled under inflation accounting, this is more of a general knowledge. Who is the user of financial statement? This is very important. Your investors, customers, shareholders, government, employees, vendors, suppliers, creditor, everyone is the user of financial statement. So as an accountant, we should be we're unbiased by preparing financial statement, right? Anything which you feel need to be disclosed in a proper methodology, you should give it in the footnote and clearly disclose this, right? Which of this is not available in financial statement? Cost of production is not available. Sales is available in P&L. Profit is available in P&L. Capital is available in balance sheet. Cost of production is not available in financial statement, right? Here, there is a question: 75,000, 870 paid as a rent for office premises is what? It's a transaction, right? Right. The 14th questions which we talks about the accounting equation. I have clearly defined accounting equation is also called as a balance sheet equation, right? Balance sheet equation which balances asset is equal to liabilities plus capital, or capital is equal to asset minus liability, right? Prepaid expenses is a representative personal account because it is receivable, right? So with this we will stop with this video. I hope the people who are watching my video is finding it is useful, and keep in touch and stay tuned with the Nesto Institute YouTube channel. And thank you so much. We'll meet you again. Thank you.